Pleasure to be back speaking to the Red Cloud audience. Consolidated Uranium, we're a global uranium developer. We have projects now in 4 countries around the world, and I'll show you those in a second, but our real focus is on near-term production in the US through a series of projects that we acquired from Energy Fuels, past-producing mines in Utah and Colorado. You can see on the front page here, this is our Tony M mine, and there's quite a lot of infrastructure there. This is a past-producing mine ready to go back into production very quickly as market conditions continue to improve. So the company was started about 2 years ago based on the following kind of tenets. First of all, the right strategy, being in the uranium market. It was our view that uranium was coming out of a bear market, and I think we've seen that play out, of course, over the last 2 years. The other part to the strategy was consolidation. Through that bear market, we'd seen a lot of projects that had seen significant past expenditures, had historic resources in place, and that carried significant market caps in the past cycle, had become orphaned, forgotten about, and nobody was advancing. So we set about to consolidate those projects. And we knew this strategy was a good one because it performed very well in the past cycle and generated outsized returns for companies that did it. We're now 2 years on. We've acquired 13 projects in those 4 countries. We're still focused on growing the business through acquisitions, but we're now focused on advancing our projects through work on the ground, and you'll see what I'm talking about when we get to those US projects. We also focused on the right team. The company was originally started by the people behind NextGen and Mega, some of whom are still involved. But over the last few years, we've added tremendous experience to the board and management, both in mining, finance, but particularly in uranium. And I'll highlight what we've done recently on the technical side. And then the right assets. So this strategy of consolidation was also, one of the tenets was diversifying the portfolio. And we've done that across geography, stage of development, and deposit type. We've also focused on top tier jurisdictions. And you'll see that in a second. And again, we're going to hammer this home. We're focused on the US, where we have past producing assets that can move ahead very, very quickly. And we're fully funded to execute on our business plan. You can see that in this slide. This is our cap table, about 140, 150 million market cap. We do have $28 million in working capital as of the last quarter. And we have a great register of shareholders. Energy Fuels is the biggest shareholder. They acquired those shares as part of the transaction when we bought those assets from them. We've raised $50 million in equity over the past 2 years, and we have a substantial register of institutional investors beyond the names that you see on the page. Talk about the team. Really what I'd like to focus on is the technical additions to our team. Again, as we made the transition from acquiring projects to sit on and wait for the market to come our way, the market to now come our way, we really want to advance those projects. We think we can add value to them. There's lots of low-hanging fruit. So we've added Marty Tunney late last year as president and COO. He's a 20-year mining engineer, both worked in capital markets and in mining itself. He's permitted and helped build mines in the Americas. And Mark Chalmers, the CEO of Energy Fuels, joined the board, 40-year mining engineer. He's worked on numerous uranium mines around the world and has been an excellent addition, brings a lot of experience to the team. This is the project portfolio. I mentioned we're in 4 countries. We're in Australia, we're in Canada, we're in the US, we're in Argentina. We like these countries. They're mining countries for the most part. They have nuclear power for the most part. They have uranium mines. And we think that in this era of geopolitical uncertainty and where end users are looking for stable suppliers and stable regions to get supply of uranium, that our project portfolio stands out on that basis. We do have a significant critical mass of uranium resources, over 100 million pounds in the historic category. We also have vanadium, and vanadium is something that comes along with uranium quite often. And you'll see in one of our projects in the US in particular is one of the highest grade vanadium projects in the world. We have also spun out a project. There is a company that we created and listed earlier this year, Labrador Uranium. That's the Moran Lake project in Labrador. It's now listed. They've raised $20 million, and there's an aggressive, exciting exploration program planned there this summer. As part of the spin out, we gave shareholders direct interest in that company. And as we look at the full portfolio, specifically with our focus on the US, there might be opportunities for us to spin out other companies or projects out of the portfolio. But we're going to focus on the US. We're going to drill right down into the mines that are listed in those green labels on the left-hand side that we acquired from Energy Fuels. This is a zoom in on that map. These projects, the main projects that we're going to talk about today are the Rim Mine, the Tony M Mine, and the Daneros Mine. These are located in southeastern Utah. And Points that I want you to take home from this portfolio of projects: they're historic mines in a prolific uranium district. Millions of pounds of uranium has been mined in this area over the past decades. Specifically in these projects, they were in production in the last bull market, and a very substantial amount of capital has been spent on these projects, over $100 million, and it'll become evident as I take you through the projects. But what that means for our company is that's capital we don't have to spend to move these projects ahead. There's a very small level of CapEx to put these projects back into production. These projects all have historic uranium resources in place with significant exploration upside. We're drilling these projects right today to try to identify that exploration upside, and I'll show you a little bit about that in a second. The other thing you need to understand about these projects is they're fully permitted, both on the state and federal basis. When they were shut down, Energy Fuels kept all of the permits in good standing. And so again, that's time. It could be 3 to 5 years to permit a new mine. That's time we don't have to spend, so we can move these projects ahead very, very quickly. We're drilling the projects. Our goal is to be ready to make a production decision by the end of the year. And one of the other key thing that you need to know about these projects, and you can see it in the map here, they're all within trucking distance of Energy Fuels' White Mesa Mill, and we have a toll milling agreement to process our ore there. I'll talk about that in a second. Drilling into the project specifically, Tony M, this is the largest of the projects in terms of the historic resources in place at over 10 million pounds. You can see it there in the bottom right-hand side. There's tremendous infrastructure here. When we talk about that $100 million that was spent, the bulk of it would have been spent here. There's 18 miles of underground development. There's significant surface infrastructure. $15 million was spent in the 2000s on building that surface infrastructure. It's also been extremely well drilled with over 6,500 holes drilled from surface and underground, 1.5 million feet of drilling. There was 1 million pounds of uranium produced out of here historically. We've just finished an 8-hole program within this blue area. We drilled basically straight down the ore body. The goal of that program is to confirm the historic resource and put forth a current 43-101 resource estimate in the coming months. Moving to Daneros, again, another past producing mine, 1 million pounds of historic production from this mine. There's underground development in place. I think some of the interesting things we should highlight about Daneros is, first of all, it's very high grade. You can see it at 0.36%. It's the highest grade project in our portfolio. Although the resource, as you can see, is quite small at 200,000 pounds, that's not where the story ends. And we've got a program planned that will start in a couple of weeks to test for exploration potential. And it's a bit hard to see in this map probably, but the historic resource that we show there is in the orange blocks there. The pinker areas where we know there's historic mineralization that's not captured in the resource, we're testing those pink areas, particularly in this area, this blue circle, with an 8-hole program starting in a few weeks. Rim Mine, the third mine, again, a past producing mine. This mine's quite interesting. It's not only uranium, but it's very high grade vanadium. Talked about that a bit earlier. At 1.8% vanadium, it might be one of the highest grade vanadium projects in the world. It also has tremendous exploration potential. The drills are turning. I think we're now on our second hole within this blue area to test extensions to that historic resource. And we should have results out to the market very soon from this project. Talk about permitting, fully permitted. It's a lot of checks on this table, but these are the permits that you need to take these projects ahead. And what this means is we can advance these to production very, very quickly because we are fully permitted. And I just want to touch on the strategic alliance with Energy Fuels. I've said it a few times. We purchased these projects from Energy Fuels, but it's more than just a asset purchase. We really entered into a partnership with Energy Fuels, and the 3 tenets of that partnership is the toll milling agreement. We talked about that, but I think we should really hammer home the point that we're the only company that has a toll milling agreement with Energy Fuels for access to the White Mesa Mill. That's the only licensed and operable conventional mill in the US, and we're the only company other than Energy Fuels that has guaranteed access to that mill. We have the investor rights agreement, which governs their equity ownership in the company. It provided for the board seat. It provides them with participation in future equity financings. And then we have the operating agreement. And the operating agreement really lets us leverage the Energy Fuels team as we're advancing these projects. We can effectively second members of the Energy Fuels team to these projects. And it's very important for a small company, of course, to have access to the technical expertise that Energy Fuels team brings to these projects, particularly because they've worked these projects in the past and they know them intimately. The U.S. uranium, I think I just want to talk about valuation for a second. And I think you've heard from other speakers why it's strategically important to have domestic supply of uranium. And what it translates into is premium valuations for companies in the US, particularly those companies that have near-term production. And you can see on the left-hand side of the table here, these are the big names in the US uranium space. These are the guys with past production, licensed capacity, and they're trading at relatively premium valuations on an EV per pound basis. We're trading at the low end of the range. And we really think that's just a function of getting the story out and explaining to investors that we should be moving towards that category. We do have near-term production. We have past producing mines that are permitted to go back into production, and we can get them into production very quickly for low capital costs. That's the story. It's an attractive portfolio of uranium projects in top-tier jurisdictions. We have high grade on a global scale, significant past expenditures, and near-term production potential in the US. We're very busy evaluating new opportunities. We've been active over the last years. We're going to continue to be active in the M&A market, and we can see a lot more activity is happening in the space. We intend to be part of that. Compelling valuation. We're well funded with over $28 million in working capital and a proven track record, both for what I think we've done in the last 2 years in terms of putting this portfolio together, but just the track record of the individuals, both in management and the board.
Okay, thank you very much, Phil.